More commonwealth, less concentrated wealth. This video will first address the value of commonwealth in contrast to concentrated wealth, and will then suggest how to discuss the Nordic model with those who are unfamiliar with it. In the US, over the past several decades, society has been drifting increasingly away from commons and toward pay-to-play, everyone for themselves. For example, many freeway carpool lanes now require that one pays by the mile, and California's UC and CSU systems by now place almost the full academic cost on the individual student. It didn't used to be this way, but over the decades, concentrated wealth, individuals and corporations, has lobbied marginal tax rates, which apply only to themselves, almost out of existence. The base tax rate is basically all that's left. The idea that everyone should pay as they go, as opposed to building up commonwealth toward large common costs, is advocated primarily by concentrated wealth, because historically such wealth has accounted for a larger share of taxes through marginal rates in order to fund such commons. However, many of our working class neighbors endorse this notion as well, drawn to some perceived principle of it and resenting those whom they perceive as not carrying their own weight. It's possible for 1% of society to acquire 50% or more of all wealth. But it's not possible for 1% of society to have, in a meaningful sense, earned or generated 50% of all wealth. In the US, 1% actually do own close to half of all wealth. But we all understand that this isn't earned in a meaningful sense. We understand that the 1% have made use of the systems and laws of our society in such a manner that they've amassed 50% of all wealth, often in markets, commodities, or real estate. But this is not to say that they've meaningfully earned it. They have not contributed to society 50% of all that is good or valuable, 50% of all that society needs. Put another way, their absence wouldn't cause the economy to shrink by 50%. The fact that 1% can acquire 50% means only that our systems and laws aren't operating in a manner that, quote, lifts all boats, unquote, as it were. And as it turns out, the top 1% have, over many decades, successfully lobbied the systems and laws into their present state, in which they're able to acquire all the more of the pie. People have historically decided to live in societies as opposed to on their own out in the woods for the many advantages. And over time, most of us have realized that what's good for society is generally good for us individually, both our standard of living, material advantage, and our quality of life, contentment. We're happier and more at ease when we're not surrounded by distress, when we're instead surrounded by health and prosperity. Most of us want abundant quality of life throughout society, because if many are left without, then our own lives are also diminished, if only for the self-centered reason that we're then aware of such plight when we would rather not be subjected to this. There are in fact some who genuinely are unmoved by the plight of others, but generally people resent the possibility that some who don't carry their own weight would be provided for just as well as those who give their best. This assumption that, quote, lazy people, unquote, fare as well as hard workers in the Nordic model is false. Put another way, the Nordic model doesn't raise the standard of living for only those below the 50th percentile. It raises the standard of living for almost everyone, and accomplishes this without hurting the standard of living for the wealthiest. How is this possible? It's possible since very wealthy individuals only ever use a very small percentage of their wealth for their standard of living. The vast bulk of their wealth isn't used, but remains invested, often speculatively in commodities or in real estate, making ever more money which they'll never need for even the most lavish standard of living. When much of this money instead flows through government, it's ultimately invested directly into society through health, elder care, child care, university, etc., such that the working class fares better and has more money to spend. And this money really is spent, thereby strengthening the economy. For evidence, see the HDI rankings. This is commonwealth. It's certainly not in society's interest that wealthy individuals hold power over society, since these individuals' motives generally reveal themselves to not align with society's needs. Typically, they want ever more tax cuts and the resulting austerity, which never bodes well for a society. For evidence, see the HDI rankings. Instead, we should seek to revise our laws and systems such that no individuals end up with so much wealth and power in the first place, because even if many are decent, it only takes a very few to cause great lasting harm. The Nordic model addresses this hazard through marginal tax rates to ensure that no persons gain so much wealth that they can unduly influence policy, and also, of course, to provide for the commonwealth. But the underlying problem is that many of our working class neighbors believe that wealthy individuals truly earn all of their ever-growing wealth, and that society is therefore better off with such exceptional individuals influencing or running government. And some of our working class neighbors worry that if the very wealthy are sustainably taxed, they'll simply leave the country with their wealth to the diminishment of society. Some degree of such flight is realistic, but we can look to the Nordic countries to see that whether or not some leave, society ends up wealthier and functions better than here in the US. So how might one speak with others about the Nordic model? First, recall that the Nordic model is essentially capitalism, but sustainably taxed and regulated. Marginal tax rates are the key, and the US used to have effective rates, but they were lobbied away by concentrated wealth. In previous episodes, the Nordic model has been described and briefly explained with references to the many countries which are successfully employing this, and options have been presented for how one can help bring about the Nordic model here in the US, contacting one's representatives and voting for those who advocate for marginal tax rates. In addition to such actions, one can speak with friends, family, acquaintances, and online. But here one must be careful because many in the US are dispirited, disillusioned, or even angry about the state of society or their own prospects, such that they are either disinclined to vote or inclined to vote and speak in anger. And many don't even know what a marginal tax rate is. We'll address this in a minute. If the subject of civics or policy is broached, it can be helpful to first entice one's conversational partner to express their hopes for society. In other words, what they would wish for society to look like and how they'd like society to operate. Their hopes will likely include results of the Nordic model, for example, the absence of homelessness and poverty, in which case one can ask them to speculate on how their vision might be brought about. Whether or not they're able to conceive of solutions, one can then explain how the Nordic model already accomplishes these aims. The fact that this is already accomplished in many countries can make a real difference to someone who is skeptical of what they would have imagined to be ideas which have never been proven. Among Americans who are familiar with the Nordic model, many imagine that the required high taxes prevent the working class from thriving. They're unaware that much of the funding comes from marginal tax rates, that is, on tremendously high incomes, as opposed to the base rate. In fact, many Americans are unaware of what a marginal tax rate is, much less that marginal tax rates are exactly how the U.S. rescued itself from the Great Depression and helped pay for World War II, as well as expensive infrastructure and many expensive programs, before gradually being lobbied almost completely out of existence by concentrated wealth. It can be valuable to explain that the base tax rate is what everyone pays, up to some threshold, such as, for example, $1 million per year, and that in this example, only those dollars above $1 million per year are taxed at the marginal rate. That, for example, if one makes $2 million per year, then the first million is taxed at, for instance, 35%, minus deductions and credits and such, and that the other million is taxed at, for instance, 45%. There can be additional thresholds at higher incomes, and these rates are primarily what fund the Nordic model. And in this way, the base rate is not greatly increased, and asset or wealth taxes can be avoided. By explaining marginal tax rates and how they're already implemented in the most advanced societies, one may more effectively convey to a skeptic just how feasible the Nordic model really is. For a description of advantages offered by the Nordic model, please see Episode 1.